Are you looking to add meaning to the money you've earned in your life? Well, tonight on the Master of Money program, learn how to work charitable giving into your estate program. And if you're just starting out on your path to prosperity, join us tonight to learn how to put monetary meaning in your life. So stay tuned for this edition of the Master of Money.
This Master of Money program is sponsored by Harvest Investment Services, a registered investment advisor where they harvest gains and minimize losses, and by Superstock Investor, providing institutional research to individuals. Our special guest for this program is Mr. Tim Newell, Principal of Harvest Investment Services. This Master of Money was produced Tuesday, May 12, 2015.
Welcome back to the Master of Money, the show that is all about helping you build a better path of prosperity for yourself. I'm Steve Beeman, your host, and it's my pleasure to journey with you down this path and do all I can to help you and your family build a better road to wealth. That's what we're about here at the Master of Money, so thank you for joining us tonight. On tonight's program, we're going to show you how to add meaning to your money. You know, as I travel around and I talk to folks, one of the most often missed things we don't talk about is how to put charitable contributions and charitable endeavors at the end of their path. You know, you may have found during your life that some organization or some institution really helped you out, and it may help your estate to help them out in return. Well, we want to talk about that on this Master of Money, and to help us with that, we'll be joined by Mr. Tim Newell, Principal of Harvest Investment Services, in the second half of the program. So stay tuned as we bring you meaning to your money on this Master of Money program. Now, last week on the program, we had an opportunity to talk with our friend Jeff Garbaz about currency trading. We talked to you about several dynamics of currencies. The first thing we hit on is the fact that there is the move in the world right now to perhaps move out of the U.S. dollar as a reserve currency. We talked about the options there up to and including the use of the IMF special drawing rights as a possible solution to the global reserve problem. Now, you're a Master of Money viewer, so you've heard of that before. It certainly wasn't news to you, but it was nice to have confirmation of it from Jeff. We also talked to you, as it relates to currency trading, about the massive risk you face should you have overnight risking governmental behavior. And we talked with you specifically about how the Swiss, in one swoop, changed the value of their currency against the euro. Well, as you play in that basket of currencies, yes, the reward can be there, but also the risk is certainly there. And then finally, we talked to you about the fact that if you're looking at currency trading to avoid inflation as a risk, well, there are probably better ways to do it. So we hope that you enjoyed that program and learned what you needed to know. As always, if you have questions on the program or any of our programs, feel free to write us at questions@safefinancial.org. We are there to answer your questions every week, and we look forward to hearing from you. In our viewer question area, last week a viewer wrote to me and said, what are the best questions I can ask my financial advisor? Well, I've spoken with you many times on how to select an advisor. We've talked about the style that advisors have. We've talked about the risks that some of them pose. But I thought to answer this person's question, I'd take it a little bit outside of the society. So I went to a U.S. News and World Report article that looked at 5 questions that everyone should ask their advisors. Well, here they are right from the mouths of U.S. News and World Report. Number 1, compensation. Yes, indeed. You and I have talked about this many times. How is the advisor compensated? Are they a fee-based advisor or a transaction-based advisor? It's very important for you to know. Number 2, does the advisor have consistency, meaning do they do the same thing with their money that they want you to do with yours? One of the most egregious examples of self-dealing was with Goldman Sachs through the financial crisis. While they were out telling you to buy their investments, well, in their own accounts, they were selling those investments short. So you want to make sure that your advisor is doing with his or her money exactly what they want you to do with yours. The number 3 area that they thought you should ask about is how they get their clients. This is an interesting one. It can talk to you about how their business is structured. Some advisors get clients from referral, and obviously that's a good way to look at it because it means they're doing a good job for their primary clients. Other advisors do seminar marketing, some of them do radio shows. This isn't a litmus test in that there's some right way to do it and you should run away if they don't do it that way. But it's important to know that that advisor lives up to your standards of business practices. If you like the idea of referral, that's something you should look for in your advisor. Well, the number 4 thing that U.S. News and World Report thought you should look at is how many clients that advisor has. Now, the reality is they're all over the map. Some advisors are highly specialized and may only have 50 clients. Others are a little more broad-based and they may have several hundred. The average, just so you know, is about 175 to 200 clients per advisor. Again, it doesn't tell you a litmus test that there's some special number, but what it does do is give you the scale of their business. If you want personal service from your advisor, well, you may look for an advisor with fewer clients. If you're looking for a higher performance but no personal service, maybe you can find somebody with a few more. It's just an important dynamic for you to understand. Now, the 5th question that I thought was interesting is on the minds of a lot of people, but it was a fascinating thing to me that U.S. News brought it up. The 5th question that they want you to ask your advisor is, how much do they earn? Now, for most of us, that's not a question we readily ask people, but I wanted to give you some important information on that. I think a lot of folks have a great misconception about how much advisors earn. The fact of the matter is, in the United States, if you look at the data, the average investment advisor, and that's all in, it's a very inclusive number, is about $75,000 a year. Now, obviously, it goes from $30,000 or $40,000 up to some that make 7 figures. But in general, most of the advisors that you talk with on an individual level aren't really making a huge amount of money. So when they talk to you about their fee structure, it's not to enrich themselves. Many of these people really do it because they want to help. So those are 5 questions brought up by U.S. News and World Report that I thought you should have a handle on, as you are fast becoming a master of money. As we move into the geopolitical arena, of huge interest to everyone around the world last week was the election in England. Now, I spoke to you about this and the importance of the English elections and how they were going to affect the country. Prime Minister Cameron's Conservative Party took a huge sweeping victory throughout the land, and that has certain implications for Great Britain. Number 1, they are going to put up for a referendum Great Britain's membership in the European Union. Well, this is enormous, and you and I have talked many times about the importance of the European Union's problems, whether it's Greece or Spain or the Ukraine and coming in from the east. The fact of the matter is the European Union is under a great deal of pressure. As instability builds in the Union, well, you will find the financial markets responding to that. In fact, interesting to note, in response to the British elections, the British pound had big gains against both the dollar and the euro. The second thing, kind of moving around, I'm going to bring up an often used country that we talk about, and that's the Ukraine. But unlike many nights, I'm not going to talk about the Russians' involvement in the Ukraine. Rather, I'm going to talk about the Chinese involvement. As you know, the Chinese have been making big inroads throughout the world in their trade routes and trade partnerships. And as Russia and the Ukraine take so much attention, if you will, the Chinese are fast moving into the Middle East and into lower Central Asia. Well, this is all part of the Chinese expansion that they're trying to do, given the anemic state of their economy. And it's also part of this, the Asian Infrastructure Investment Bank that you and I have talked about. Now, in addition to that, it ties in to the brand new Trans-Pacific Partnership. And I just gave myself a beautiful segue into talking about this trade agreement that's getting so much press here in the United States. What's happening very simply is the Obama administration has put together what's called the Trans-Pacific Partnership. It's a trade agreement with China, Japan, and a number of countries. But here's the downside, the drawback, the rub us the wrong way stuff. When you talk about an administration that really wanted to be open, Well, the Trans-Pacific Partnership is fully confidential. No one knows what's in it. And to give you an insight into that, as I studied it and I looked into some of the congressional people I know and the staffers, if you want to read the Trans-Pacific Partnership Agreement, we'll get a load of this. First of all, you have to be a member of Congress or higher in your security rating. Secondly, to read it, you go into a room in the basement of the Capitol that's a locked room where you are given one section of the TPP at a time. You're not allowed to have a camera. You're not allowed to take a cell phone in there. And any notes you take have to be returned before you leave the room. Well, this is not exactly an example of an open system. And I think that's what's got people on the left upset about it, people on the right upset about it. When you get Donald Trump talking about something together with a super liberal, like who's our socialist friend from New Hampshire that's running for president, Bernie Sanders. When you see those two people agreeing on something, you know there's a problem. We'll keep the TPP in our forefront for you so you can see what it's going to do. But generally, the goal of it is free trade. The problem is it establishes a court, and this is what I've read in the footnote type areas, so I'm not sure exactly how it'll play out. But they've established a court that has superseding power over sovereign law so that American companies would be subject to this court's laws, not America's. Well, that's a problem when it comes to national sovereignty. And so there are a bunch of issues with the Trans-Pacific Partnership, and we'll keep you apprised of all of that as you stay tuned to future editions of the Master of Money. In the economic area, I mentioned one of the big things last week was the movement of the British pound against the euro and the dollar. 2 weeks ago, as we spoke about currency trading, we mentioned to you that most of the countries in the European Union gave up their sovereign currencies when they joined. England did not. They kept the British pound, and there's a lot of talk that the Brits want to go back to the pound. Well, the Grecian situation will have a great deal to play out in that, but with Prime Minister Cameron's new election, we'll see if they can keep the British pound strong. The second thing I want to mention, going back to our friends in the Far East, China for the third time cut its national interest rates. Now, what they're trying to do, of course, is continue building growth in that country. As we've talked here on the Master of Money, they've come from a double-digit growth rate down to the mid-single digits. And the fact is they've stimulated just about all they can. You'll hear people who travel to China talk frequently about they built cities that no one lives in. Well, you can only do that so long. So China, in its effort to stimulate the Chinese economy, cut interest rates once again. We now have a world that seems wedded to this idea of stimulating economies by cutting rates to zero. Well, we're going to find out where that ultimately leads. Some of us are concerned about the bubble of debt we're building, but we'll see how that plays out. Finally, the April jobs report came out at about 200, what was the number? 223,000. Now, I'll be honest with you, I was on Fox News Radio, and I had forecasted lower than that. I came out at 169,000, so bad for me, I actually missed it. But my reasoning was simply that with the anemic growth in the first quarter, we shouldn't really be seeing a lot of job growth. Now, what happened was, yes, we had jobs that were taken, 223,000, but we have the same issue with those jobs we've continued to have. Very low wage growth, a lot of part-time jobs, not the kind of jobs that would signal a robust recovery. So yes, I will tell you now that the society looks at the second quarter and sees it rebounding from the first. I think that's fairly obvious. But as we go forward, second, third, and fourth quarter, I don't think we're going to see the kind of growth we need as a nation to get out of debt. Let's look there at 4.5%, and I think for the year we'll be closer to 2.5%. Well, let's hope we at least hit that 2.5%. In the financial markets, 2 of the 3 major indexes sustained record-breaking territory last week. Both the Dow and the S&P gained about 1.5%, and as a result of that, we're back into their record territory. The S&P above 2,100, the Dow above 18,000. The only slaggard was the Nasdaq, which actually dropped by about 1%, but stayed in its record territory above 5,000 on its benchmark. All 3 of the markets are kind of looking in this little short, narrow trading range, wondering what's going to happen to both the U.S. and the global economy. Now, in the financial side, I wanted to mention another thing that comes up to me frequently. If you read the media about public offerings and who's raising the money, last week there was a lot of media about Uber, this little taxi cab concept that's going worldwide and is raising friends on one quarter and enemies on the other. If you're not familiar with it, and this is kind of a neat idea, what Uber is a phone app. In other words, if you have a smartphone, they built an application for your smartphone that allows you to dial into a network of freelance drivers. Unlike a regulated taxi cab, you can negotiate the rates with the drivers, and you have a lot more freedom and flexibility. Well, the interesting thing about all of this is the value of it. In Uber's efforts to raise money, Goldman Sachs, I think, is their lead underwriter, and they put a value of $40 billion on this little phone app. Yeah, I'm speechless about that. You may remember when I think it was Alan Greenspan who said we have irrational exuberance. Well, just 2 weeks ago, Janet Yellen, his replacement at the Federal Reserve, came out and said, we have some relatively high values. Well, if a phone app can be worth $40 billion, just maybe that's a high value. And where does that go? Right back to those two words I talked to you about time and time again. You can join me as I say this, risk control. You're right. We want to make sure that we're protected if this market does enter a downside phase. Finally, in our geopolitical and economic things, I want to speak especially to those of you who live in California and Texas. I am far from a conspiracy theorist, but you may have heard or seen of Jade Helm 15 taking place in your neighborhood. Yes, this is an exercise of the combined forces of the United States. We don't really know why they're doing it. I, for one, don't think it has a malevolent curve to it, but I will tell you what it does have. An awful lot of us are concerned because we don't know why they're doing it. So if you're seeing Jade Helm in your neighborhood, connect that dot to what's going on in St. Louis and Baltimore, connect that dot to what's going on at the Justice Department, and here's where I'm going. A lot of the scuttlebutt in Washington these days, at least from friends of mine I talk to regularly, is that the United States could be heading toward a summer of discontent, very much like 1968. Why do we care about it? Where does the rubber meet the road? Well, it's simple. You want to make sure you have your risk controls put in place because, again, if we see volatility in the United States, we'll see volatility in the markets. Well, tonight, as I said, stay tuned in the second half of the program. I'm going to be joined by our friend Tim Newell, and we're going to talk about how to put meaning into your money. I mean, money's a wonderful thing. I've lived with it. I've lived without it. The reality is it's a great thing, but we also want to have meaning to why we live. And oftentimes, working with the charitable side of your estate planning, you can do just that. You can add meaning to your money. So stay tuned for the second half of The Master of Money.
Have you ever gone online and Googled the words financial advice? When you do, you get over 3 million results. That's a lot of places that want to tell you what to do with your money. There are new websites that take your information, run it through their calculators, and generate automated financial advice with recommendations about how you should invest your assets and plan for your future. They're called robo-advisors. But they're not real advisors because they're not real people. Robo-advisors crunch data, then spit out cookie-cutter recommendations based on financial formulas they have created. Robo-advisors don't know your family, your history, or your personality. They don't know how you feel about your children or your charities. They don't understand what you hope to accomplish with your money. So here's the question. How can you trust financial advice from a source that doesn't actually know who you are or how you feel? You can't. Why? Because you are a person, not a number. You're an individual, not an algorithm. To get personalized advice, you want a qualified financial advisor who knows you, not a computerized avatar that thinks it does. You want an advisor with proper credentials and credibility, supported by an organization with compliant process and protocol. That's what we have. That's who we are. And we have the ability to understand you better than any computer program. Of course, we have the latest innovative technology too. But we use our technology differently. We use technology to support our expertise, not to replace it. We analyze, evaluate, and interpret your data to provide advice specifically for you. Advice about how to achieve your unique financial goals. Robo-advisors can crunch numbers, but numbers are only part of your story. The formula we follow puts you in the center of the equation, and that's exactly where you want to be.
Welcome back to the program. Well, tonight, as I said here on the Master of Money, we are going to take the high road. We're going to talk about what you can do with your money to bring meaning to it. And whether you're just starting out in life or you're finishing your life with a great plan, we want to make sure that everything you do gives the total meaning to your life that it should. So tonight, I'm joined once again by our expert, Tim Newell, principal of Harvest Investment Services, who's going to share with us his thoughts on how to do that more comprehensive financial look at your life. Tim, welcome to the program.
Steve, once again, thank you for having me back. And before we get started into the topic of the night, let me just say once again, Steve, thank you for the passion that you bring to bringing financial literacy to the people of America and people right here in our own community. And you're making a difference, Steve, and I really appreciate what you're doing to provide financial education to folks out there.
Thank you, Tim. That's very kind.
It's more than needed. And as I said, you're making a difference, which is really what the topic of tonight, this segment is really all about.
Segue.
Making a difference. You know,
right.
People go to church or the synagogue on Sundays or Saturdays, and they put an offering or a tithe or something in the plate because they want to make a difference. People respond to tragedies like the earthquakes in Nepal because they want to make a difference in people's lives. And I believe that we're all created with somewhat of an innate desire to make a difference in other people's lives, for us not to live selfishly just about me and my own little cocoon that I live in. And that's really what the concept of charitable giving is really all about.
Well, Tim, as you've talked with me on the program, and folks, as we've talked about advisors and how they work, Harvest is a comprehensive planner. In other words, you're not a robo-advisor. You're not out to just say, well, here's retirement. You put this much money aside, you save this much money, and voila, you have money, but no meaning. You're actually out to help people. So in your work, when you talk to people coming in, how important do you find that concept of meaning to the money to be?
Steve, it's inherently important from the very beginning. From a young couple getting started, putting together the first parts of a financial plan and trying to build budgets and trying to determine what can they afford to give and where do they give it. And so it starts with even the very beginnings of financial planning, which starts with trying to figure out where am I at in budgeting. Okay. And often people aren't giving all that they would like to be able to give simply because it's not properly budgeted and they don't give it the right priority in their life.
Well, let me just ask real quick, because I know for a lot of the folks watching, their first priority is kids. But even with kids, there are ways to give money that are smarter than other ways.
Absolutely, sure. And it really is all part of, like I said, the budgeting. How do you line up your budgets and what's important to you? There are various different smart ways to be able to give, but I think as you relate to the kids, I think it's important for our kids to know that giving is important to us, that it's part of our value system, and that we're instilling those values in our kids, in our children. When I give one of my children some money, like an allowance or something like that, I talk to them how they're going to divide that up. And there's money that goes into giving, there's money that goes into long-term savings or investing, there might be money that goes towards buying presents or gifts for individuals, and then lastly doing something for themselves. And so we want to instill those values in our children from a very, very young age. And we see that coming through in the financial planning process. And it doesn't stop at a certain point. It really is all part of life, and even end-of-life planning, what we call succession planning, and estate planning. And how do I build values into the next generation? How do I show what was important to me to my children and my grandchildren, and that'll make a difference for generations and beyond.
You just brought up something, and I hope you folks noticed it. You talk about succession planning. And that's something most people don't really, they focus on, okay, when I die, I'm just going to hand it off to my kids. They don't really think about what legacy do I want to leave. Sure. What you're kind of getting into with Harvest is you work on this idea of, like a business would look at succession planning, you look at that for the individual.
Absolutely, absolutely. You know, Steve, recently I was speaking at a men's group on a Saturday morning at a church, and was talking about some of the biblical principles of giving. And not just giving out of our income, but giving out of the increase of our wealth. Mm-hmm. And I asked the men that were attending the breakfast that morning, I said, how many of you here, could I see a show of hands, of how many of you here would like to be able to see something go to this church or other ministries or other charitable organizations that are important to you should something happen to you and you pass away? And most every hand in the room went up. Mm-hmm. And I said, well, let me ask you this. How many of you have actually made any arrangements to make any of that happen? All right. And all of the hands went back down again.
How many people want to be fit and thin? How many actually do it?
Yes, exactly.
Now, when you go into succession planning and you sit down with one of your clients, do you help them evaluate a charity?
Well,
again, I don't know, we're safe as a not-for-profit, and I know we have an allocation that we try to do of maybe 30% to marketing and overhead, and the rest we try to be benevolent with. Do you get into that with your clients, or is that something you leave in their court?
Well, we can help give them some guidance in that area, how to go about putting together a charitable section to their estate plan. But ultimately, it's about what's important to them. And I think it really starts with... we really start under the premise, Steve, of making sure that their values are in the right place. What do I mean by that? When we sit down and we start doing planning, they bring in their pile of statements. Mm-hmm. And on every one of these statements, whether it's their 401k or their bank account or their investment account at the XYZ brokerage firm or their annuities or their deeds to their home, there's something that's characteristic about every one of these statements. It has their name on it, mm-hmm. right? And one of the first steps in becoming charitable and understanding how to build charitable planning into our overall plan, not only while I'm here, but also after I pass away, is coming to the realization that really we don't own it. We've been entrusted with assets, mm-hmm. And with things and with stuff. And we've been entrusted with these, and we're really only a steward. We're a fiduciary, a trustee, right? Yep. And we, one of the first things that helps people become a better giver is to hold things open-handed and recognize that it's only been entrusted to us for a period of time. And eventually, it all goes back in the box. All the pieces go back in the box, and we leave it all here.
You know, it's interesting. And again, folks, there are little nuggets you pick up when we bring experts on. But for Tim to talk about stewardship, I actually wrote on what I called the 10 laws of stewardship one time, because I think it's such a critical thing for us to transition our thinking that it's not ours. Yes, we earned it and we have control over it, but we are stewards of the next generations. And that's not necessarily a religious statement, although for me and you, I believe it is. But for people in general to be able to take that kind of a stewardship view of their resources, to be able to say, it's mine today to manage. I may need it for me. I may want to give it to my children, my grandchildren, but maybe there's also some other stuff I can do with it. And it does bring them more feeling, more contentment with where they are.
Sure. I often say to folks when they're coming in and starting to visit and starting the process to build relationship with us, I say, if I'm doing my job right as your planner, I'm going to be asking you over the years some very challenging questions related to your finances. In other words, as we put together a plan to be able to achieve your given specific goals, whether it be putting the children through college or retirement income stream or whatever the specific goals are, and let's say we've put together the plan and we're well on track toward the achievement of that goal, and it looks like that goal is going to be well achieved and there's going to be money left over. Usually our next topic of conversation is, okay, so once we've achieved all these goals, then what? What's it really all about? And how do you want to convey that to the people that have been entrusted to you to convey value to. Your spouse, your children, your grandchildren, and how can that be built into a plan? And so, Steve, we've seen over the 30 some odd years I've been in this business, man, I'm feeling old when I say that. But over the 30 some odd years I've been in this business, we've literally seen millions and millions of dollars go to charity, go to churches, charitable organizations, ministries that are near and dear to people's hearts. Why? Because they put it into a plan. They actually wrote it into a plan. It was part of a written plan. It wasn't just an idea that they thought of in their head, but it was part of an actual plan. If you go to church or the synagogue on Sunday or Saturday and you desire to give $1,000, most likely you need to plan to do something to make that happen, right? You need to be able to do a written plan. What is that written plan? You need to probably bring your checkbook.
Yeah.
All right. You need to be able to write a check. Today, I suppose you can give electronically with your credit card or your debit card, but there's part of a plan. There's something written that's going to take place to make that transaction. Now, if you're just putting $20 in the plate, you don't really need a big plan for that. And that's really what happens. When you don't have a plan, it works out to be like putting $20 in the plate. When you have a plan, it works out to be over one's lifetime tens of thousands and hundreds of thousands and even millions of dollars that go to things that are important to them and to reinstill those values in a different way to the next generation.
Folks, I have to laugh and smile with you. If you recall, last week I had Jeff on the program. We talked about currencies, and I let Jeff go because he's so passionate about this stuff. It's fun to listen to him. Well, I don't know about you, but I'm having the same reaction tonight. I enjoy listening to this. Tim is one of the few advisors that I know who really cares holistically about his clients and is able to help them navigate these feelings of money, if you will. And so I appreciate the commentary. Are there specific tactics that you would look at, at these folks and say, as you're setting up this plan, and by the way, I want to go back to that. If you grew up in the business world, how many of your businesses operated without a plan? None. So I would wonder why you let your life operate without a plan, but that's another story for another day. But are there specific areas that outside of not just planning for it, do people make mistakes when they go into estate planning in this area?
Sure. Yeah. I mean, there are ways to be able to give very creatively. There are tax planning strategies connected to giving. In other words, if I'm going to give out of the increase in my wealth through my estate planning, what type of assets should I give? Should I just give money out of my checkbook or my taxable account, or should I give money out of an account that has a big tax liability hanging on it, like an IRA? Maybe I should give out of that IRA account. If I'm going to give X thousands of dollars to this 501c3 ministry or charitable organization, why not give it in a tax-advantaged way?
By the way, if you didn't pick up on that, I didn't even know until you just said it that you could take out of an IRA and donate it.
Yes, absolutely.
So, folks, I talk with you often about getting professional help. This is one of the reasons right here, what we're hearing from Tim. So, as people do this, your goal with them, not just then is to meet the holistic goal, but also to minimize tax liability.
Absolutely.
Who of us doesn't like that? Maximize the amount their kids are going to get. I love that as a child of a father who had a business. So I'm going to give you a little editorial space here. As you're talking with these folks and you say, look, if I could get a hold of you, what one thing would you teach them? What one thing would you want them to know? And folks, we're not scripted here on the Master of Money, so I'm putting Tim on the spot doing this. So I appreciate your going along with me on it.
Well, I would say, first of all, it starts with understanding, as I said before, that we don't own it. And when that we are really just stewards, we are trustees, we are managers over something that really belongs to somebody else. And we have the responsibility to manage that money as a fiduciary for a period of time, however long the good Lord gave us here on this earth. But then there's part of stewardship, part of being a good fiduciary over the assets that have been entrusted to us to manage, is to manage them in such a way where they can produce maximum results. So, for example, let's just say that I wanted to be able to give $10,000 at the end of the year to my church, okay? And I could choose to just write a check, right out of my checkbook, and that's certainly a one way I can do it. Or let's say that I've got some appreciated stock in my investment portfolio, my taxable investment portfolio, whether it's in joint or individually or in my trust. Let's say that appreciated stock, meaning that maybe I paid $3,000 for this stock that's now worth $10,000. If I sell that stock, right,
incur capital
I'm going to
gains tax.
incur a capital gain, be it short or long term, on that $7,000 of gain. So I'm going to take from that $7,000 of gain and possibly give, $2,500, $3,500 away in taxes. So of the $10,000, I'm going to give 25-30% of it away to the IRS. Why not just gift that stock in kind to my church or whatever the charitable organization is, and then they sell it. When they sell it on their books, because they're a 501c charitable organization, there's no taxable event. They don't have to pay taxes on that gain.
And I get the deduction for the
And I get the full deduction.
10.
Right, I get the deduction for the full 10. So, I'm just using this as just a real quick, easy example of one of the ways that we can give a little bit smarter, give with a little bit more wisdom behind it, and there's strategies of ways to be able to do that on an ongoing basis. But it really takes planning. It's not the type of thing that you can do off the cuff. You don't, go to church on December 29th and decide that maybe I should donate stock instead of writing a check.
Most people don't.
It takes planning. It takes planning in advance to make that happen. Just like it takes planning in advance to make it happen out of our estate. And there's ways to be able to give money to ministries, to charitable organizations, to organizations that have similar values to yours, and make a difference that will live far beyond, your time here on this earth. But it takes putting it into a plan. And by doing proper planning, one of the things that we encourage folks, if we can help you avoid probate by putting together a proper plan. Let's say that the typical probate ticket in this county that we're in today, you add up all the legal fees and court costs and attorney's fees, et cetera. You add all that up, it can be anywhere from 3 to 8, 9, 10%. And so if we can do something to help somebody avoid probate, and they take that money that would have normally gone into the cost of probate and the delays and all of the problems associated with that, and just by putting together a plan, now they can literally tithe on the value of their estate just by putting together proper planning, and their kids are not going to get any less than they
You're
would
just
have.
choosing, I'm going to give it under my control to a charity rather than the state.
Sure.
Well, Tim, I've
which
got
is what we do with taxes as well.
Unfortunately, I got to bring this to them. Folks, as you watch the program, there are sometimes you'll see, I just love this business, and this is one of those times. Tim is clearly passionate about what he's doing with Harvest, and Jeff is passionate about what he does at Superstock, and I hope you see in me once in a while passionate about what I'm doing, because ultimately that is what makes the difference. But we here at the Society are always pleased you choose to join us. And by the way, we are a 501c3, so if as you go home tonight you say, you know what, I like what they're doing, go to our webpage at safefinancial.org and click on that little donate tab. We're always happy to have people do that. But I want to thank you for joining us tonight, and next week we'll see you for another new edition of The Master of Money. But until then, have a happy, healthy, and prosperous week.